Hello and welcome to this session of how I do analyze the markets. Now today is the 9th of June 2025. Let's get into it. Starting us off with Monday, we do have a bank holiday in the Eurozone in observance of Wheat Monday. Now whenever you do have holidays, it means that there is going to be relatively low liquidity in the financial marketplace and speculators are going to have the upper hand in trading. It's advisable to take a look at what is happening in terms of bank holidays around the world. Moving over to Tuesday, we don't have a lot of activity happening except for the British pound, whereby they're going to have their average earnings index for the 3 month and the year release and the climate count change, whereby we do anticipate the numbers picking up slightly from the previous numbers of 5.2 thousand up to 9.5 thousand, but that is just the forecast that we are going to be looking at. Moving over to Wednesday, it's going to be the highlight of the week, whereby we do anticipate consumer price numbers for the United States. Basically, this is inflation numbers, whereby we do anticipate the numbers to slightly pick up from the previous number of 2.3% up to 2.5%. But looking at the month-on-month release for the core CPI and the CPI itself, we do anticipate for the core CPI to pick up slightly and the CPI itself to continue remaining the same. Now, this is very important because it's going to impact the federal decision of where they're going to set their interest rates in the upcoming few weeks. Moving over to Thursday, during London Open, we do have GDP for the British pound, whereby we do anticipate the numbers coming out actually lower than the previous number. Quite interesting to be looking at it. Later on in the day, during a New York session, we are going to have PPI for the United States dollar, whereby we do anticipate the core PPI to come out slightly better, or actually better than the previous number of negative 0.4%, and the PPI numbers actually coming out greater than the previous number of 0.5%. At the same time, we are going to have the unemployment claims, whereby we do anticipate them to be almost constant from previous numbers. Last week, we did receive non-farm payroll numbers, and we did see an uptick in the number of jobs being created, and this is a leading indicator of the job market in the United States. Moving over to Friday, we are going to close the week through the prelim University of Michigan consumer sentiment, whereby we do anticipate the numbers coming out almost exactly to the previous number, and this is something that we are going to pay quite the attention to. Moving over to the commitment of traders, we are going to start with the metals, starting off with silver. Silver has been a very interesting asset of late, and we did see ever since May 27th to June 3rd, we did see quite the amount of long positions being added, almost 10,000, actually exactly 10,000 positions being added to longs, and at the same time negative 1,621 positions were offloaded from shorts, meaning institutions are favoring more long positions on the silver metal. Moving over to gold, very interesting to note that we did add almost 12,464 positions to longs, and at the same time we did offload 302 positions from the shorts, meaning institutions are also favoring the precious metal to the upper side. Switching gears to the financials, British pound, 1,000 positions being offloaded from longs. At the same time, institutions offloaded 3,871 positions from short. Japanese yen, almost 2,700 positions being added to longs, but at the same time they added more short positions, meaning institutions are favoring selling opportunities on the Japanese yen by adding 7,350 short positions. Moving over to the euro, 3,355 positions being added to longs, but at the same time they offloaded 2,733, meaning in the past few weeks, institutions have been favoring more buying opportunities on the euro compared to selling the euro. S&P 500, this is where things get very interesting, whereby we did see 38,000 positions being offloaded from longs, while at the same time we did see just a small number of short positions, around 3,863 being added to shorts. Now this shows us that institutions are favoring selling the S&P 500, which is quite interesting looking at price action, and we shall go into it in a moment's time. But institutions are favoring more selling opportunities of the S&P 500. When you go down to the Nasdaq, almost 1,000 positions were added to longs, while at the same time only 85 positions were added to shorts. Institutions, yes, did add quite a significant amount of long positions, but at the same time they added generally small positions on their shorts. We are going to be focusing more on the S&P 500, looking at how the data is going to affect our trading in the upcoming few days, because this is quite a significant amount of long positions being offloaded. Looking at the net positions, yes, we can argue out that there is more net long positions, but the amount of long positions that have been offloaded from the 27th of May to June the 3rd, which is, if we go to our calendar here, you can see ever since 27th to 3rd, institutions offloaded almost 38,000 positions on the S&P 500, which is quite interesting, because if we go look at the stock heat map, we can see that most of the assets, most of the stocks are currently up in prices. When Meta up 8%, Nvidia up 2%, Apple, most of the companies are in the green except for Tesla, which is going through something very interesting with the fallout between President Donald J. Trump and Mr. Elon Musk himself, whereby we did see Tesla stocks actually tumbling. If you can just pull up a chart of Tesla right now, we can look at how the stocks did take a very huge beating over the past 7 trading days, whereby the stocks has lost 25% of its total value, which is quite significant looking at the marketplace. But could this be an opportunity to add more long positions, because it makes stocks much cheaper to buy currently at the moment? Moving over to technical analysis, we are going to start with gold. Looking at it on the daily time frame, going through the lower time frame, ever since the market did open today, if I can have my session breaks on this chart, let me add my session breaks. Ever since the day did begin, we did see gold gain almost 150 pips to the upper side, but we had a massive meltdown to the downside. Then during London session, the markets did pick up. We did get this inside bar formation, whereby the markets are currently printing bullish at the moment. Could this be a short-term correction for a further push to the downside? I will be anticipating for prices, if I can pull up a Fibonacci from this high to this low. I want to see how prices is going to react to this zone, which is going to be my point of interest in the financial marketplace for this upcoming week. If we do get price action resisting this zone, getting a clearer sign that the bears are coming into the markets, I would want to see the weekly lows being taken out. But at the same time, if we do get a breakout of this structure, a retracement back into this zone, I would anticipate gold prices moving further to the upper side. I'm going to lean more into buying opportunities, but this is going to be dependent on how this zone is going to hold up, the zone of 33.50 and 33.40. This is going to be my point of interest for the upcoming few days that is going to be ahead of us. Silver, looking at silver, this is one of the things that has really caught my attention over the past few trading days, whereby if you look at it on the daily perspective, ever since we did get the tariffs, it has bounced back almost 30% over the past 63 trading days, which is quite amazing. This is one of the best runs, bullish runs we have seen on silver metal for quite some time, if not at all time. Looking at the dollar index, we have been seeing the dollar index struggle, but we do have region of support forming around this region, around the 98 mark, whereby we will want to see if this region does hold and prices continue pushing to the upper side. This will give me much more confidence in buying the dollar. But at the moment, if we do break below the 98 region, this will signify more selling opportunities on the dollar, meaning I'll be buying more gold, I'll be buying more silver, anything against the dollar will be bought. Looking at the volatility index is back into normal trading territory, which is around the 16% region, whereby if you look at it, this is a fear index whereby it judges, okay, what could be the relative average volatility over the next 1 year. Currently at the moment, it says the market can move either direction 16% in the next 1 year, which is quite significant looking at where we have come from. When the trade wars were at its peak, we did have a 60% reading on the volatility index, but the index has relatively calmed down, meaning the markets are going back to normal trading territories. Looking at the S&P 500, this is one thing that I would want to also keep a keen eye on, especially looking at how many positions were flooded. We did see a gap forming around this region here, whereby the market did open on Monday 12 with a gap. The market bounced to the upper side but came back down, retested that region, the opening price, and then prices currently are in a breather. The market did make a rally. Now we are in a corrective phase on the S&P 500. Looking at how candlesticks are printing side by side, we don't have any clear direction of where the market might be headed to, especially looking at the commitment of traders report, whereby we did see massive offloading of the S&P 500. I will want to keep a keen eye, especially on the weekly candlestick. Looking at it, today is Monday. The weekly candlestick is going to be relatively the same compared to the daily time frame. Forgive me about that, whereby I'll anticipate, okay, if institutions are going to add more positions, we might take out the most recent highs that was formed back on February, mid-February, around 6,144, which is quite a decent tradable range in my opinion, of around 2.3% of the total index. Looking at the Nasdaq and the S&P 500 have quite a similar price action printing, even though the commitment of traders does say otherwise in terms of how many positions are being added and offloaded from long positions. But looking at the price action, more or less similar. I want to see how prices are going to break out of this structure. This is the region where I would want to keep a keen eye on this zone here. If we do break to the upper side, whereby we do get a clear sign of the bulls coming into place, retracing back into this region, I would want to look for more long opportunities on the Nasdaq, moving to all-time highs, which could possibly happen sooner rather than later, whereby if we do break to that, the most recent high is almost 1.6% from where we are currently at the moment, which is going to be quite a decent tradable range. This is going to be more of cost per dollar averaging, entering into trades, adding more positions when prices go into your favor. The Dow Jones index, interesting to note, but similar sort of price action forming, whereby we do have this region of resistance around this place here, whereby we do have relatively equal highs, and I want to see how the markets, especially today being a Monday, I want to be very cautious of how this candlestick is going to print out, because most of the times we do get the Monday candlestick trapping buyers and sellers, accumulating basically both sides of the coin, manipulating them on Tuesday. Then we are going to have the distribution for the remainder of the week. But I want to see how prices are going to react to these relatively equal highs that we do have around that region, which traces back quite significant, back to March, end of March. And this is quite a significant zone for me to be looking out in the financial markets. But I want to get myself in the bandwagon as early as possible. Buys, be careful with the stop loss, anticipating prices to take out relatively all-time highs, which is quite a decent trade to be taking a risk to reward ratio of 1:5, whereby I'll be targeting 5% of the total value. Looking at the Russell, very interesting. We did see quite a, a, an uptick in the offloading positions of the commitment of traders, but I am more into long opportunities on the Russell. Looking at price action, similar sort of pattern playing out. Actually, on the Russell, we have already started breaking to the upper side. If we do get a retracement, I want to get myself as quick as possible into this trade, which is going to also have a decent risk to reward ratio of nearly 1:3, whereby I'll be targeting 15% of the total value of the Russell, which is quite decent in my opinion. Looking at treasuries have been very, very interesting of late, whereby we have been seeing more and more positions being offloaded. There is distrust in long-term treasuries in the United States. This is the 10-year treasuries, and as you can see, ever since January, February, okay, this was late September, we did see quite the offloading of treasuries in the United States. Moving over to oil, commodities, prices failed to break below the $58 a barrel, which is quite good for us, because if prices did go continuing further down, it would have signified, okay, the fears of a recession could be much higher. But prices respected the $58 a barrel, came back up, and we are currently trading above the $60 a barrel, which is quite the magical number for an economy to consider itself doing well in terms of the black gold. I would anticipate prices breaking to the upper side. We do have also another region compared to S&P 500, Nasdaq, Dow Jones. We do have some sort of a resistance forming around that region. If we do break to the upper side, a retrace, I would want to see oil prices moving back up to at least $80 a barrel in the next few trading weeks. WTI, it's going to also be a same analogy that I'm going to be using. Looking at the magic Fibonacci, we did have a massive retracement. The markets did respect the 50% region, and this could be an opportunity also for me to get involved in oil buys. Moving to these regions of inefficiencies that we do have around $69 a barrel. So Brent oil is slightly higher, but they are more or less correlated. Actually, they are very, very correlated. Looking at Bitcoin, Bitcoin has been very interesting. Ever since the highs that was formed back at $112,000 a Bitcoin, we did see, which is quite normal. Whenever Bitcoin triggers recent highs, we do have a short-term retracement, then the market picks up. Looking at it, if I can extend this Fibonacci to this region, if prices of Bitcoin come back to this region here, I'll be very interested in looking at more buying opportunities. But let's say, for example, which the market, there is always that probability. What if the market does not come to this region? I would want to get myself into buying opportunities, let's say at these relatively equal lows, anticipating if we do get some sort of a support forming around that region, which is the magical 100,000. $100,000 a Bitcoin. If we do get some sort of a support forming around that region, I'll want to look into more buying opportunities. Moving over to Forex, starting with USD Chinese Yuan. I don't usually trade this, but I usually look at it as a sentiment, whereby we did have prices tapping into a most recent high that was formed on 8th April around 7.3, and then the markets aggressively rejected that region. This was the height of the trade wars, and then everything started calming back down, whereby parties came into the table. We had the British pound making their trademark deal, the euro started their talks. China came into the party, and also they wanted a share of the pie. We did see the Chinese yuan did gain quite a significant from the dollar, but this is quite normal looking at how we had a massive bull run ever since October 2024. Euro USD, clear up. I would want to see clear buying opportunities to the upper side. I wouldn't want to look into more price action of the Euro USD compared to what is happening. If the inflation numbers come out weaker this coming Wednesday, I would want to see more long opportunities on Euro dollar. But if the data does come out stronger for the dollar, I would want to see prices coming back down. So for Euro USD, looking at this price action, as you can see, we are in a corrective phase. Prices are struggling to make a move in the markets compared to these types of candlesticks, these one are very cautious. You need to be very cautious whenever you see such kinds of patterns printing out in the market, because this is essentially the market telling you it's gearing up to do something. You could get yourself involved here, but there is a high likelihood you're going to get yourself trapped before the major move. Before a major move does happen, the markets usually tend to manipulate. Looking at British pound against the United States dollar, I want to see how prices is going to react to this region up here. If we do get prices closing below this region for the daily candlestick, looking at how it's forming, we do have 13 hours remaining on this candlestick. If we do get this candlestick closing below this region, I'll be more than happy to sell British pound against the United States dollar, anticipating prices coming back down to 1.31575, which is almost 2.95% of the total value of the British pound against the United States dollar. Going over to the British pound against the Japanese yen. The Japanese yen has been interesting, looking at how many short positions are being offloaded currently at the moment. And this explains the price action whereby we have been seeing a choppy market. This is what we consider a choppy market. And I would want to get myself involved in such price action until we do get a clearer breakout either to the upper side or to the lower side. If I was to have zones, I would mark this a region of resistance around this region over there. I would want to see the markets break to the upper side, come back down, retrace for a further push to the upper side. But if we do get a candlestick that breaks to the upper side, but we do have a change in state of delivery, I would want to look for short opportunities back down into 1.93495 or 191.263. This is all going to be dependent on what is going to happen around this zone that I have marked out. USD Swiss franc, we did have a drop, a massive drop on the USD Swiss franc, which was quite significant if you can look at it from this high to this low, whereby we did lose almost 12.5% of the total index in 83 trading days. The markets did make a recovery, a small-term, short-term retracement, but the markets could be continuing further down to the downside. But looking at this was all because of the trade wars, whereby institutions and other traders favor the Swiss franc as a safer haven compared to the United States dollar. I would want to see these numbers coming back up to fill in these inefficiencies around the 0.8600 mark. I would want to look into more price action, especially looking at assets that are going to be denominated by the dollar. I want to see what the inflation numbers and the producer price numbers are going to come out this week for me to make an informed decision in the financial marketplace. USD JPY, beautiful setup forming currently at the moment, and I'm going to enter a buy position exactly here, anticipating that we are going to have a slightly stronger dollar for the week and prices could hit 148.615 over the next few trading days. Why do I have this position running? Because if you look at commitment of traders, we did see quite the offload in the long positions of the Japanese yen. This signifies that institutions, if they are covering their long positions, we are going to anticipate a weaker Japanese yen in the short term price movements in the financial markets. So I'll want to see prices coming back up to 148.90, which is quite decent for me. Looking at it, this is almost a 3% gain on the total index of USD JPY. That is going to be it for me. Have a peaceful week. I'm not going to be looking at the stocks, but looking at Tesla, we did mention how things have been performing, but I want to look at more long opportunities. Have a peaceful week. We are going to have live trading sessions within this trading week. Keep informed, stay safe. Remember, plan your trades, trade your plan.